Hello everyone, we're back studying our break-even point and contribution margin. On your screen you will see activity 2, which we worked on earlier, and you had seen the answer to the break-even question there. So next up we're going to take a look at this contribution margin income statement. So far in this chapter we've looked at contribution margin, how we calculate it 3 different ways. We've looked at break-even point, how we calculated that 2 different ways. And now we're going to take a look at pulling all this together in a new format for the income statement. So you actually already saw this, because if you did this calculation here, you use these numbers up here. So this is what's called a contribution margin income statement. Notice that the sales are the starting point, so that's the same as the income statement that you're familiar with. But instead of doing cost of goods sold or operating expenses next, instead we break the expenses into variable and fixed, and we have a contribution margin calculation. This is very handy when we're making any kinds of break-even calculations or cost volume profit calculations. So we're making decisions and we have all of our expenses broken up into behavior, which is how we need them. All right, so here is the income statement you worked with in order to calculate break-even. So the next thing they're asking us to do here is to prepare a contribution margin income statement to check your work. So what we're saying is if we sell 400 units, or if we have sales of $200,000, that we should have net operating income of 0. All right, so now we're going to double check that. Okay, before we start, I'm going to actually sneak down here. Remember what we said before, break-even point, remember we said these 2 numbers are actually the same, right? 400 units and $200,000 are the same. The other way to find the 200,000 break-even point in sales dollars is break-even point in units sold, so 400 units times your unit selling price, which in this case is $500. And that gives you the same 200,000 in break-even that we calculated before. Okay, so remember 2 different ways to calculate break-even in sales dollars. All right, so now let's take a look at our income statement. So if we are break-even, we're saying that our sales are going to be 200,000. Okay, the other way to look at that is it's 400 units times $500 selling price per unit. Okay, 400 units times a $500 selling price per unit. Now, how much will our variable costs be at break-even? Be careful, our variable costs are not going to be $150,000. Why? Because variable costs change with activity. So if your sales are changing, then your variable costs are changing. They're not going to be the same. So how much will our variable costs be? Well, we're selling 400 units, so they're going to be 400 times our variable cost per unit are $300. Okay? 400 times 300. So our variable costs are going to be $120,000. Subtract your variable costs from your sales, and that gives you contribution margin. So our contribution margin at break-even is $80,000. How much are our fixed costs? Well, they're also $80,000, which means our net operating income is 0, and that means that we correctly calculated our break-even. Okay? All right, so next up we're going to skip down to 2 pages. We're going to go down here to example 2. Okay, so find example 2, and this is going to give us a little more practice. We want to make sure that we really know what we're doing with contribution margin. We're going to use it a lot. So again, please pause the video, take a few minutes, and do numbers 1 through 5. Okay, so make the calculations for 1 through 5. Now be careful, because here they're not asking you for break-even. They're asking you for a contribution margin income statement at the current level of sales, which is 30,000 units. Okay, so I'm going to pause this, take a few minutes, do those calculations, and when you come back I'll give you the answers and you can check your work. Don't just look at the answers. The best way to do this is you have to practice it and then check and see how well you're doing. Okay? All right, so I'm pausing and I'll be back in a minute. Hello everyone, so we're back. We're going to go through these numbers 1 through 5 and see how well you did with your calculations. All right, so the first question asks, how much is the contribution margin per unit? Again, I encourage you, make sure that you write down the words. Every time you write down the words, it helps your brain to remember it, right? So the contribution margin per unit, and if you didn't do it, make sure you add it in. Selling price per unit minus variable cost per unit, and that gives us our contribution margin of $4. All right? If you didn't get that right, make sure you go back, check your answer against my answer, and see what you did wrong. Okay? All right, next up, we're going to prepare a contribution margin income statement, excuse me, at the current level of sales. All right, so remember the format of the contribution margin income statement. We start with our sales, and then we're going to go to variable costs, contribution margin, fixed costs, and net income. So your contribution margin income statement at the current level of sales should look like this. We're selling 30,000 units. Our selling price is $10 per unit. Our variable costs are $6 per unit, and we're selling 30,000 units again. All right? And then, so you don't really need this. You could just take your sales of 300,000, subtract your 180,000 variable costs, and you get contribution margin of 120,000. Our total fixed costs are $80,000. So that means currently we have net income of $40,000. All right, now, remember, if you have net income, that means that this level of sales is higher than our break-even point, right? Because at break-even, we have 0 income. So that means that when you calculate your break-even, you know it's going to be less than 30,000 units, because at 30,000 units, we have a profit. Okay, next up, how many units of product must we sell to break even? Okay, again, write down the formula. The formula is fixed costs divided by contribution margin per unit, and you should have gotten 20,000 units. So that agrees with what we just said. We know it's less than the 40,000 that we were currently selling, right? Okay, next up. What is the contribution margin percentage? So contribution margin percentage is contribution margin per unit divided by selling price per unit. So our contribution margin percentage here is 40%. Finally, we want to know how much do we need in sales dollars to break even. Now remember, we have two choices. We already know our contribution margin ratio, but we also know our break-even in units. So here are our two possibilities. You take your fixed costs divided by contribution margin ratio, and that gives you $200,000 in sales. Or take your 20,000 units, multiply it by your $10 selling price, and you still get $200,000 in sales. Okay, so I'm going to wrap this up now. Next up, I would recommend that you go back and practice some of the extra exercises that we have for at home, and review all of the videos. Make sure that you understand all of these important concepts. So the important concepts are contribution margin, how you calculate it in units, in ratio, and in total, how we calculate break even, and then how we do a contribution margin income statement. All right, I hope you found that helpful. See you in the next video.